we should be getting to hear from them in just a bit.
All right. Apart from that, before they speak, a couple of other details. The profits have fallen almost about 3% for the company, so that's not good as well, at 1,726 crores. And the constant currency growth this time has come in at just 1.2%, lower than the 2.9% that they've seen last quarter around. Also, the margins adjusted for a provision of $18 million that they had to make. The margins are below estimates at about 19.4% or so. So not looking good, and the stock, in fact, is one of the big losers on the index at this point in time. Well, the management is getting ready to speak, so I think we can cut across to them in just about 2 minutes from now. But for the market itself, the mid-cap index is holding up in the green, so there's plenty of action there. But from the frontliners, apart from HCL Tech, which is under pressure, okay, I think we can cut across.
Revenue growth profile for the last few fiscal years outperformed the top three shares of the industry as the largest sales and outperforming the average of top three in the 16 as well. And where does this confidence really coming from? Our confidence comes in from our order book. Our order book is 10% higher driven largely by two kinds of business, sensitive business, which is infrastructure, which is a very large portfolio of property and revenue, as well as our engineering services, which has a very strong complement of strategic product development work which we do for our customers. If you look at our EBIT, we continue to drive our EBIT. If you really look at our
Oops, there's some issue with the audio over there at their end, so we'll try and cut back to that when we get some more clarity. But in the meantime, let's focus on one discussion which has been on the minds of many investors, the way some of these private sector banks, smaller ones, are going in for massive expansion, the likes of DCB Bank, just to combat the onset of... Okay, I think we can cut across to HCL Technology, so let's do that.
Which grew by a little over 40% Y&Y. Telecom and media entertainment grew by 23%, and public services, in spite of the one-off incident, grew by 22%. As you're aware, the public services business for us includes, besides government, includes oil, gas, energy, utility, and logistics, and we see significant growth in that market space. Manufacturing continued to sustain at 12.7%, and FS on back of a very strong fiscal was at 7.7%. From a geography perspective, Americas grew by 12.3%, Europe by 18.2%, which continues to drive a large part of growth for HCL, and then we continue to see a similar trend going forward as well. From a milestone perspective, our quarterly revenues crossed 10,000 crores, so that's an important milestone which got achieved in this quarter, which we are extremely happy about. From a booking and pipeline perspective, as you're aware, we've been making investments in next-gen ITO, beyond digital, as well as the industrial Internet of Things, and we see that reflect in our, the quality of bookings that we did within the quarter as well. This quarter, we clocked in 10 large transformational engagements in excess of $1 billion, largely driven by infrastructure services and engineering. From a vertical standpoint, it was broad-based, and no real call-outs, but I think, in general, most sectors continuing to do well from a booking standpoint. From a headcount perspective, we are a little over 105,000 people. We continue to drive, be an industry leader in the revenue realization per employee, which stands at $58,400, which continues to drive our philosophy of automation, which has not been a new journey, as well as the non-linearity in our business models that we've been pursuing for a number of years now. From a client addition, we added $50 million plus client. We added 1 in $30 million plus clients. We added 3 and $20 million by 2 and $10 million clients by 9. This is in addition in terms of a very significant cross-sell and upsell, if you will notice, in the top 5, top 10 customers that we have shown in there. With that, I'll give it to Anil to walk us through greater financials and greater details into our financials.
Thanks, Anand. It has been a very good quarter, as Anand explained. We started our year with 13.5% a Y-on-Y growth in this quarter in constant currency terms. And the US grew by something like 12%, the Europe grew by something like 18%, and service lines, including infra, grew by close to 17%, PPO at 20%, and engineering continues to be at 20% plus, which is at this quarter was 24%. Not only that we could sustain that growth, Y-on-Y growth, but we could also sort of improve our margins.
All right, well, let's move on.